Hey guys, how's it going? It's the Crypto Analyst here, and I hope all of you guys are having a good morning, evening, wherever you guys are from. And welcome back to another Bitcoin technical analysis. And in this episode today, I want to talk about this recent breakdown and how we actually formed the bear flag, then broke downwards out of it, and are now getting rejected by both the bear flag and the 50 EMA. So I'm going to be talking about where I believe the price action of Bitcoin is going to be going in the short-term future, as well as doing just an overall analysis. So if you guys are interested, go ahead and stick around for the video, and do not forget to hit the like and subscribe button, as it does help out the channel a lot. With that being said, let's go ahead and dive on into this. So with Bitcoin, of course, topping out over here, just much like Ethereum did, and having a pretty steep fall down, it did form a bear flag. Now, this was something that I talked about in Discord when it was happening and playing out. And now that this actually broke down out of it, what we see is that it, first of all, bounced right off the 50% fib retracement, and then bounced right back into the support of the bear flag. Now, this is important because, one, fib retracements are being extremely respected in this zone, so are the EMAs, and so are your trend lines. So as soon as we saw this breakdown happen, the first thing I did was draw up a fib retracement saying, all right, this is probably the top, and this is definitely our swing low. So as soon as I drew up this fib retracement, it immediately went straight into use. And of course, you can see that from the swing low, we bounced right up to the 382, the silver fib, and then came right back down to the 50% fib and bounced off of that. So rejection from your 382, support off your 50, and then this is where things started really getting unique for me, because when I'm looking at a situation like this and how fibs are getting retracement, or how fibs are getting respected in their retracements, when the bear flag was in play here, immediately I was thinking, all right, well, you have rejection off your 382, you have this bear flag that came up, in addition to being rejected from your 50 EMA and your 382 fib retracement, you have a bear flag on top of this. All these things were saying, all right, you're probably going to have a break downwards out of this, and then we'll have to see what happens from there. Of course, we broke down out of the bear flag, hit our 0.5% fib retracement, and then came back up, and this is really where things started popping off, because what we see is a fib or the bottom of our bear flag actually started getting used as resistance. So now you have former support, turn resistance, wicked up, touched it, immediately got rejected twice in the next 2 4-hour candles, and then this is really kind of just going sideways since. The big thing that I've noticed in this area so far is the fact that we did, one, we did get rejected from this area, but two, we're actually getting rejected from the 50 EMA now. And if you're looking at this from a little bit of a bigger picture, it's pretty clear and evident that you are getting rejected from this 50 EMA. You're wicking up, you're getting close to it, and then it just wicks back down. So what you know is that the 50 EMA is still a heavy area of resistance, and when it's trying to break out of this, it has a couple layers of resistance above it. So not only does it have this bear flag that's being used as resistance, it has the 382 that's being used as resistance, and in addition to that, you also have the 50 EMA that's still getting used as resistance. So it's really just a combination of all of these things keeping the price action of Bitcoin down. And what really starts to get scary for me is when I'm looking over here at our MACD and our indicators and oscillators, and looking at this, what it looks to me like we're setting ourselves up for triple bearish divergence, because this is showing very low levels of volume. The volume's falling off. This is not looking very strong. You can look at this on a smaller time scale, and you're still seeing just bullish exhaustion at this point on the 1 hour, even going to like something like the 3 hour. You're seeing your MACD round off. So when I'm looking over here, over on our 4 hour chart, the thing that I notice on our MACD is that we could very well be setting ourselves up for a triple bearish divergence of something maybe a little along the lines of this. And so what this would do for us is actually create this triple bearish divergence scenario, which would lead me to believe that Bitcoin's going to dump again. Maybe it's not going to be as long or as harsh as the last one, but we saw double bearish divergence did this to us, and so I would imagine triple bearish divergence brings us down to at least this 200 EMA area on the 4 hour. Now, ultimately, my goal would be to get back down towards the bottom of this trend line. I would be completely fine if we did hold this 200 EMA and then started retesting resistance again. But the big area for me is if we do actually come back down here and test this support line again, what we're able to do, if I can put this on the 1 day, is really kind of confirm this descending triangle. So if we're able to come back down into this zone, touch support, and then really come back out, what we're able to do is really confirm the fact that this is an ascending triangle, and then that it would eventually break out. Now, if it broke out of this, if this does turn out to be an ascending triangle and it breaks out towards the upside, you'd probably see prices of around at least mid 5,000s would really be my belief. So somewhere probably mid to upper 5,000 range would probably be the breakout of this, just because of the sheer fact that there's really nothing in this area in between, here and there. Because if we look over here again, there's just literally nothing. All you have just straight, this is almost entirely made up of two candles over here. You have your first one right here and your second one right over here. So looking at those two alone, I mean, it's just not a lot of resistance. Since this went parabolically down, it can just as easily go parabolically back up, because we talked about how it doesn't set support for itself when it goes parabolic. And so when this happens, it's not setting resistance either. So when I'm looking at this again, obvious levels of resistance from this overall trend line. I think this is the thing that we need to break first, the one that's been around for the last 13, 14 months. And as soon as we break that, I think things are going to start looking a little bit more bullish. But you can still see that we're getting rejected from the same exact trend line that we have for about the last 14 months now. Anyway, going back to the 4-hour, I want to talk about a couple of the indicators and oscillators that are also playing a big part of this. Alright, so moving over to our RSI, I think that this one's another very clear one to me, at least just with my knowledge of the RSI. Over here, one of the things that I was calling about how this is going to dump was the fact that this was double bearish divergence on your RSI. Now, the reason for this was the sheer fact that you came up, you had a dip back down, and then you came back up, and upon another swing high, a second swing high, you had a lower high upon a swing high, and that's always a big deal on your 4-hour RSI. I can't stress that enough, and I know I've mentioned it in like 100 videos, but it's every time it's just so significant. And 99% of the time, this usually makes for a great trade, and so that's what we saw over here. So the thing that I'm wondering is that upon two lower, essentially a lower high up here on your RSI, immediately the thing that I'm thinking of, all right, is that since this was oversold or overbought, it came back down into normal range, came back up into the overbought range, and was a lower high. This is immediately telling me that we're going to come down towards somewhere in the oversold range. The reason for this is that this was for 3 swing highs, all in the overbought range, and now with this showing lower levels of positive momentum on your RSI, I really imagine that this thing at some point in the near future is going to come back down into this oversold range. That's just how it works. If you go over here and you look at any other example of this happening, it happens. So let's look at this. Here, the exact same situation. You had a lower high upon a swing on your RSI, and immediately this thing came eventually down into this oversold range again. We can go to another range over in here and kind of show the same thing again. Over here, you had a swing high, you swung low, you had another swing high, and it was lower than the previous one, showing double bearish divergence, came back down into the oversold range. I mean, there's really not an example where this doesn't happen. Over here, here's the next example, same thing happened, lower swing high, right back down into the oversold range down here. Same over here, lower swing high, back down into the oversold range. So again, I don't really see this as too bullish of a scenario. I think really the only thing that you do have on your side is that you are relatively holding this level above your previous consolidation support, which being this entire range over in here. So as long as you hold above that, really as long as you hold above your 618, that's going to be a big area for me. But the thing for me is that I could easily see us coming down to the 618 area before bouncing back up towards the upside. So really time will tell, but I think for the short term, even with your stochastics is very neutral at this point, but like your RSI and your MACD are saying that this could get a little bit bearish if something doesn't change, if something doesn't pick up. Again, you're just showing lower levels of bullish momentum coming into this market, right now. And when I'm looking at this for a price action in, the short-term future of Bitcoin, it's not necessarily the most bullish one. You have the CME futures gap, but like even that, that doesn't have to get filled right now. And so when I'm looking at this, as long as it's holding under this, really under this 50 EMA, it's pretty bearish. And if it's able to break that or the 382 or, kind of get rid of some of this resistance, then I think that you could have a lot more of a bullish case scenario. But I think in the short term, it's more likely that you actually have a bearish case scenario for Bitcoin. And I know that's probably not what people want to hear, but I think it's just realistic at this point. So when I'm looking at this, I'm really looking towards two levels, which are really the same level. And that being the 200 EMA and the 618. At this point, these things are almost on top of each other, and I don't think that that's a coincidence either. So when I'm looking at these ranges, it's kind of funny how often this happens, and you have two major levels of either support or resistance collide, usually being a fib retracement and an EMA, or an EMA and a consolidation range. Again, like this is a great example of that. So when I'm looking at this again, the 618 and the 200 EMA on the 4 hour are pretty much one and the same at this point. They are pretty much on the exact same range, being about $3,665. So we'll have to wait and see. Again, I'm currently bearish on this. You know, I had some longs on Ethereum, but in the moment, I might be looking to get a nice little short on Bitcoin as long as it stays below this range. So that's going to go ahead and wrap up this video. If you guys did enjoy, do not forget to hit the like and subscribe button, as it does help out the channel a lot. With that being said, I will see you guys in the next video.